which will force a bigger production cut in Q2 than in Q1, and we're going to definitely look to Ford to see if they ratify that.
I think that we're starting to see the end of the tightness, Carl. I was doing a lot of work on Skyworks on Friday. I think Skyworks, when they made this acquisition from Silicon Labs, will be able to make a lot more chips. I see Taiwan Semi starting to talk about making lower-end chips, which is what you need, the auto companies need. I think that as much as I like Volkswagen, I have a feeling that they are out of step with what's been happening in the last 72 hours. And the last 72 hours have been very good news for a lot of the auto companies. And I think the fourth quarter is going to surprise people. And this is weekend. This is stuff I did over the weekend. So I'm feeling quite confident that things are about to change. Remember, the reason why the autos didn't have any relief is because they're making the lowest end. David, it's the lowest end chips, and it was not advantageous. Taiwan Semi saying we'll do it for you. It's big. Skyworks.
All right, that's a little out of consensus because they do seem to keep indicating this is going to go on longer than people anticipated initially.
Well, I'm very homework driven, David.
Amen to that, Carl.
No, it's true, Jim. We've tried to make that point a couple of times that the automakers don't necessarily have the biggest leverage because their part of the mix is not the biggest, and certainly, as you said, not at the top of the pricing structure. But we'll see if they can make this the worst of it that we're in right now. It would be great news.
Right, we'll hear from Ford. I happen to think that the tone is going to change. Someone got to Taiwan Semi and said, look, enough. Start making them. And I think it's very significant. We'll hear from AMD this week. They're not auto, but I do think that there is an easing. Cisco said there's no easing with DRAM, David.
No easing on DRAMs.
Right.
Yeah.
But these are not DRAMs. These are very low-end chips.
Right.
That has not been lucrative. But I think Ford and GM are going to be surprised that the chips come.
That there's going to be more supply than anything.
Yes.
All right, good. Be helpful. Got to sell cars, trucks.
Exactly.
Yes.
Exactly.
Something else that's selling, cybersecurity. You know that. I did want to talk about that Proofpoint deal. We mentioned it briefly. Of course, Dom Chu covered it at the end of Squawk Box. It is $12.3 billion. It's all cash. It's a leveraged buyout. Again, very active, of course, at Thoma Bravo. They have been. They continue to be. 36% is the premium over what they're calling a 3-month volume-weighted average closing price. That is through Friday. Represents about 9 times, I'm looking at a couple analysts here, let's call it around 9 times estimates of the company's fiscal 22 revenue. I got Wedbush saying here, fair but attractive valuation in their opinion. There is that 45-day go shop that we often see as a part of these go private transactions where they have the opportunity to at least look for other potential offers that would be above what Thoma Bravo's paying, Jim. But it goes to what is the continued sort of pace of acquisition in, broadly speaking, this arena.
Well, look, I think that this is precisely what I'm talking about the market being reasonably valued. Proofpoint's an expensive stock. Gary Steele, remarkable CEO. He's done a fantastic job. And yet, David, he gets an all-cash deal after all the value creation he's done. So what does that say about companies out there? This is an expensive deal. Gary Steele did well for a shareholders.
9 times next year's revenue is usually a pretty good multiple, one would think. Although I don't know what the peers are for this company and what their multiples are, Jim. Although I would assume it's less, at least. Obviously, on the takeout, you are typically paying a control premium.
Well, Gary's, he's got a cloud business. He's a cloud native. I think that now everyone's going to start looking at some very expensive companies. CrowdStrike, they'll look at. Now it's a newly public company. It doesn't want to be sold. But I never thought that. Gary Steele's been on Mad Money, I don't know, maybe a dozen times.
Right.
I never heard for a minute that he would sell out. But Carl, when you get a bid like that, you may not. It may take forever to get. It may take a couple of years to get your stock where that is. And I applaud Gary. He does security. Remember, he's software as a service for cybersecurity compliance company. And I think it's a remarkable deal, Carl. And it says you should not be selling all this tech because you hear it's too high. I would have said this is among the companies that was too expensive if you believe that. So I think this is a great sign for the market.
It is a sizable deal, Carl. Oh, we should mention one of the larger ones we've seen in terms of private equity for some time. I mean, you have to write a fairly large equity check for these. Obviously, you're taking on a good amount of debt as well, but getting above 12 billion, we haven't seen that too often.
No.
But another sign of sort of confidence overall, and obviously, as we said, Thoma Bravo has been very active and has had quite a good track record, therefore their ability to gather new funds and deploy them in this way.
Very strong.
Interesting, guys. Speaking of things at higher prices, Jim, B of A, Savita's got a piece out this morning looking at the number of mentions of inflation on corporate earnings calls, tripling year on year. 3x, biggest jump in our history since 2004.
But it's concentrated. It's steel. It's polyethylene. It's lumber. It's not. And polyethylene, by the way, we're going to get a thaw. We're beginning to get the rebuild of the plants that were taken offline by Uri. It was much worse than we think. But I think the inflation is concentrated, and I know that I waffle. David, I often waffle. I know that I waffle on this, but it is concentrated inflation, and it's not really hitting wage inflation as much as you think. In other words, people aren't making more money.
No, not yet, although we bring on CEOs who have jobs at the lower end, to be fair, but can't fill them. Can't fill them.
Well, they should pay more.
We go back to that, and then people want to just stay home and not work while they're collecting benefits that are in excess of what we can pay them. That's the answer that you get from a number of these CEOs of fast casual restaurants and things of that nature.
They should pay more. They should just go and listen to the conference call from Chipotle where they're perfectly willing to pay more. And isn't that the best anyway?
That would be what you want.
Right. They have the highest average unit volume, and they pay great wages, and they don't want to. They don't have a problem. Just like Costco does. Costco pays the most.
Costco and has good benefits too.
Yes, it has the best numbers.
Has always, I know, it's always defied sort of. Some of their competitors have moved more towards them as opposed to the other way.
Well, Carl, in Jim Senegal, when he retired, he explained it. I said, why do you pay more? Because it's very simple. When you have people who have turnover, you have to train them for at least 3 months, and you make nothing off those people. So why not just pay people more and have them stay? And the turnover at Costco is incredibly low. And the turnover at other stores is very high. So they have a lot of people who are either being trained or have to train them. And that is cost them much more than what Costco does. And that's what's going on.
Yeah, no, the friction of hiring and adding, onboarding new workers is huge, Jim. It does remind me, though, companies that have been talking about higher costs. Boston Beer gets, I think, a price target cut over at Citi today. No, they go to neutral on SAM, right? Isn't that right, Jim? But a company that we were worried about input costs, and then they saw margins up year on year last week.
I thought that was truly a bad call, that downgrade. Truly. Come on.
Oh, yeah, I got it. Sorry.
Oh, God.
I was thinking about what I'm going to talk about, the rails. I was looking at you.
I just flew in from San Francisco, and boy, my arms are tired.
Yeah.
Sam had a great quarter. Truly picked up share. Everyone thought, Carl, that hard seltzer, that there's so many competitors, that these people would be hurt. They put up a fantastic quarter.
You did it as the Mad Dash on Friday. I remember that.
I thought it was great.
It was. I know you said that.
But
very happy with
Carl,
it.
the analyst wants to call the top. How many people have to come in and call the top? I am not a top caller.
No, but you don't want to get on analysts for actually being somewhat negative to neutral. I find they're typically way more often positive than anything else. So
I think it's starting to change.
it does. I mean, there have been a number of analysts who are getting you the wrong way this morning.
Well, they're irritating me.
Yeah.
Yes, they are.
Top right.
Guys, I did want to hit the rails again, if that's possible. It's a sort of an
Right side next to the
unprecedented
USB.
War we may enter into, or at least this fight over
Fingers through the
Kansas City Southern. A lot of news over the weekend
Top down.
to get to, and I
Down,
want to
down.
try to include for people who may be sort of their eyes glazing over already, like, whoa,
Speakers.
really? All right, sorry.
There's like a microphone here.
complexity of the
Port.
review from the STB. That's the
STB,
confused
yes.
people.
Okay.
But as you
Headphone
see
jack.
it there, Kansas City Southern above 300.
Now it's sides.
Listen, Canadian Pacific got news this week and they say it's good. And it is. They're going to be able to review their deal, the STB.
Smash that
under
like
the
if you like this
so-called
video.
old merger rules.
Testing
So they got
a
waived
new
from
phone
the new
here.
rules, even though they're 20 years old.
Huge upgrade.
Which should make it an easier antitrust review, simply said.
Subscribe
CN, for its part,
if you haven't.
we don't even really
Hit the bell
if you
to
do
get
them under
notified.
the old rules, maybe you want to do us, but we actually prefer if you do us under the new rules, more stringent rules. They feel as
Drop a
though
cool comment.
that will actually
Nice.
appeal more to these shippers,
Positive,
many of whom are coming out in
constructive
favor of
comment.
the CP deal, and now this morning
Leave all
a
that
lot of them are
toxic
coming
shit
out
out
in
of
favor
here.
as well of the CN
If you
deal,
could,
sort of
that'd
this
be great.
almost you could call it the war of shipper letters. That's a
How long you
that's a
like?
thing.
How
We
long
can
you
start
like
making
guys
it a
like
thing.
this video?
But the most important
You know, these
decision
type
that
of
will be
videos
made
last
here
for.
by the STB will be whether they
Guess
allow
I'm gonna round it out
both
to
companies to pursue a
dozen
so-called voting
minutes.
trust,
There you go.
which seems highly likely, of course, for the CP deal, given they've already gotten this waiver, but is also still seen as likely
We'll
for
see.
the CN deal. That removes the risk to shareholders, and that says to the board, well, you're going to get paid, even if this thing doesn't go through or takes 2 years for the
Flash
review.
on.
The money is going to actually go into the trust. It will, therefore, you will, as a shareholder, get your money, and then the trust is created to hold the stock that has been purchased. So that takes the risk. away.
Autofocus
It is.
on.
That's the key thing here. Will they get the voting trust? And right now, it does appear likely that in the next couple of weeks, they're going to sign up the CN deal unless CP comes back with a higher offer. I think that is simply said. That's based on a lot of reporting at this
Stretch
point.
it out.
Over the weekend, Kansas City Southern says, yes, this is likely to lead to a superior proposal. There's due diligence to be done. It could take a couple of weeks, but the
Oops, today.
based around that. I prefer the volatility trades rather than playing for a big gap higher in some of these names that have already run so much. I think probably the next leg for some of these names will be into 2022, when the question becomes, okay, how do these look in a more normalized world again? And by the way, we still expect double-digit earnings next year, and I think that will support solid equity returns. But I do think we have to temper expectations because valuations are near the high end of the band of where you would expect them to be for where we are
1.5 zoom right
from an
here.
economic recovery standpoint.
Monica, you talk about a big move higher. Let's talk about a big move lower. You talk about as well going into the summer months, the sell in May narrative. Monica, what are you telling your clients about risk management right now? This market, like Katie's just talking about, you've just been talking about it, it's had a great run. Do I need to build some protection into my portfolio? You're selling volatility right now. How do I provide that risk protection? Do I need more of it?
Yeah, but let me clarify. Selling volatility near term around earnings. Still like that trade because, again, we just haven't seen
Damn,
all
zoom.
realized the way it is implied. As you think about moving
Cool
into the
slider.
summer, though, think about where we were from a volatility standpoint last year. Vol is significantly lower than we were going into last summer, and I would argue, the risks don't look as scary. So it is time probably to think about
Double the
taking
zoom,
a little bit of your
double
chips
the
off
zoom
table and buying some insurance.
than
And
before.
we've been doing that, multiple ways. You could look at put
Looks
spreads.
much better.
You can actually also look at buying one put, selling two, so that you're knocked in at a lower level where you're comfortable. That makes a lot of sense. It can actually cheapen the protection trade quite a bit.
Monica, of course, one way people have hedged traditionally is in fixed income, in U.S. Treasuries, for example. That hasn't necessarily worked to your benefit recently. But are we going to see the correlation come back between when Treasury yields go higher, big tech sells off, or is that narrative kind of over now?
I think directionally that still makes sense over the intermediate to longer term. I just think it's tough near term to assume that that's going to be the case. And so, most of our exposure for people who are looking for, more significant returns, still a lot of equities, both in the U.S. and overseas. And I don't necessarily want to take a lot of that off. So I'd much rather pay a little bit to protect myself than to immediately rotate into an asset class that I still think is challenged, which is my view of fixed income in the near term. And I would also highlight all these concerns around tax rates, things like that. I think back to where we were in the fall going into the election. If you go back to October, the U.S. is up 25% from where we were in October. And I had a lot of people who were worried then about having exposure into the election and what that could mean from, tax hikes, et cetera. And none of it's come to fruition.
Yep, we may see it happen this time. I'm really fascinated to hear what the president has to say when he goes up to the Hill later this week. But what I really want to talk about is inflation. Katie started the show talking about what was happening in the commodity space. We're seeing shortages. We're seeing copper rising. You've got the ags rising pretty sharply. There are pockets around the United
Copper,
States
baby.
where it is clear there are labor shortages as well. Do you still think the market is underpricing inflation here? What is your outlook in terms of inflation? And again, where do I want to be if I want to get the biggest bang for my buck?
Yeah, we've had people continue, again, if you go back to a year ago, where people were most comfortable coming out of the downturn was what they thought was safer. So things like U.S. large cap equities. Now people are starting to understand that, to your point about growth is back, there's a lot of demand now for building and, different types of infrastructure spending, et cetera. We have seen more interest. I think it makes sense. Parts of emerging markets, commodity-focused economies, and looking at commodities outright. We don't do as much in the single commodities like copper, but certainly people are looking to oil and the energy market as another way to play that. And it has underperformed.
Yeah, oil, of course, getting hit with all the virus concerns in India because it is a major importer. Monica DeCenso of JP Morgan Private Bank, thank you so much. And coming up, Apple plans $430 billion of investment in the U.S. over the next 5 years. We'll break down where that's going and what's behind the move. This is Bloomberg.
Bloomberg Market Update is brought to you by Interactive Brokers. Direct market access to over 125 markets with low commissions, low margin loan rates, and support for best price execution.
More efficiently. Why isn't there more competition at those levels? I've long thought boards, that's a big issue there. And this is a very complicated subject, but CEOs like to create the impression they're irreplaceable and that's why they have to be paid so high, because if you don't pay them that, they're going to leave and go somewhere else. It's a market for labor and talent like any other. But I don't think that's been tested very much. I don't really see CEOs jumping around because, I got my stock options cut this year, so I'm going to move to be CEO of something else. There may be a little bit of that, but I think that we do need further analysis of why this market doesn't work more efficiently.
Yeah, I agree. They're all treated as though they're superstars, and as we know, there really are only a few. That's also been the case, of course, in the hedge fund industry for years. People who are truly just mediocre, making tens of millions of dollars. Jim, also something that you would expect maybe would be a part of these compensation arrangements is a clawback provision of some kind, right? You're getting paid on the performance of the stock price, but what about 3 years from now? If things really turn